Thank you all. If I could kindly request to take your seats for the next panel. We'll be having a refreshment break after this one, where you can have more time to delve deeper into some of the discussions from the interesting panel we've just had. Just give everyone a few moments just to take their seats for this panel. Great, okay, I think we can get started. So my name is Nikhil Sanghani, I'm the Managing Director of Research at OMFIF, and yeah, I'm delighted to be joined by four very distinguished guests to talk about, well, feeding off the last session really, talking about driving sustainable capital markets in emerging markets, which is perhaps not a label we should be using. So I'm joined here today by Rami Aboul Naga, the Deputy Governor from the Central Bank of Egypt, Irene Espinosa from the Deputy Governor of the Bank of Mexico, Sheila Mbajiwe, the Deputy Governor of the Central Bank of Kenya, and Sarah Kemmitt, who is not a Deputy Governor, but is from the lead Secretariat at the Net Zero Banking Alliance at the UN Environmental Programme Finance Initiative. Well done. Yes, got that all. So I want to pick up where we left off from the previous panel, and starting with a poll actually for those in the room and those tuning in virtually. We have a poll which feeds off the last discussion about what is the biggest challenge to mobilizing sustainable finance in emerging markets. There are four options here: regulation, lack of investable projects, insufficient data or information, or debt constraints. And that's we can come on to that topic in a moment. I wanted to start with you, Sheila, actually, coming on to the point that you mentioned just now about how in many cases emerging markets are ones who are bearing the brunt of and some of the cost of climate change already, even though they're not necessarily the ones contributing to carbon emissions and climate change more generally. But you made that really interesting point that you're still taking actions to help mitigate some of the effects of it. Could you give us a sense of what actions is being taken right now by the Central Bank of Kenya to help and your focus on sustainability right now?
Thank you, and good morning to everyone. I think that when you look at the African continent, what we said is it's a low carbon emitter, and that's the truth across the whole of Africa. And obviously sub-Saharan Africa, which is more my area, it's even more true. When we talk about Kenya, the concerns about the environment are real. In 2010, we had a new constitution. It's written into our constitution. In 2016, we came out with the climate laws around what you can do in our country. We have, in 2013, the Central Bank of Kenya introduced the ICAPs, the risk factors that need to be built in around the environment into our banking structure. Kenya Bankers Association has come out with sustainable finance guiding principles. 2016, Kenya banned all plastic bags in the country. If you're at the airport and you see people throwing plastic bags in a bin, they're boarding Kenya Airways because it's illegal in our country to have them. So when we talk about whether Africa is ahead or behind, and when I hear people saying that we need capacity building, I find it a bit funny because actually we're already very green. What we need to do is to be able to adapt toward the changes that are coming and make sure that we put the buffers in so that we have the resilience as we move forward. I think that's the point I want to make.
Thank you. And same question to you, Rami. What has been the focus on sustainability at the Central Bank of Egypt?
Thank you. Well, the Central Bank of Egypt has been trying to play a more of a constructive role as of recently. Over the years, we've obviously seen how the globe and the global warming has really helped change and reshape how the mode of doing business is, and especially in terms of finance. And with a more social and environment aware mentality and mindset, I think this has forced us all to become a lot more prudent in the way we look at things, especially related to climate. I agree with Deputy Governor Sheila that the African continent is a very green continent, and it's a low emitter. However, as she mentioned as well, we have to be involved. It's our duty, it's our role. Yesterday, the deputy governor from the Central Bank of the Philippines said we have to be enablers, mobilizers, and doers. This is a role we have to assume, even though it is not clearly constitutionally in some of the central bank mandates, right? This is a very novel kind of shift in the thinking, and it needs a lot more effort by the central banks. Again, although the typical mandate is probably monetary and financial stability in most central banks, but we have to step in. Central banks have a strong role, they have influence, and that's how things can really be mobilized. In Egypt's case, we've started by building our own capacity. And yes, even though we're green, I think we're not aware of how green we are in Africa because the standards have not been clearly set. There's still no full alignment and consensus on what the standards are, and this is an area where there will be gaps. So it's important that once these standards are set, we can really come out and assess ourselves and say we are green, we are low emitters, where we stand within that scale, and start really being able to negotiate our positions. We've built that capacity by emerging and integrating more with all the forums that are out there, the NGFS, the SPFN, and the EOSD. We've been trying to play an active role there. We've also started by issuing a sustainable finance guiding principle to banks back in 2021, which was clearly mandated to prepare the banks for a steady transition to more climate-considerate practices, and that has helped lay the foundation for the identification and measurement of related risks and opportunities. We've also conducted a sustainable finance gap analysis in the second quarter of 2022. This covered the entire banking sector. The goal was to obviously assess the sector's current stance on the topic and identify the challenges and opportunities, and to also make the banking sector agents more aware and familiar with central bank future plans on this issue. Last but not least, we've issued now, based on the results of this gap analysis, we also issued our binding regulations on sustainable finance. That was issued more recently in November 2022, based on the result of that analysis. The main components were to integrate sustainability and sustainable finance in the bank's practices. 2 is to establish departments within the banks that are reporting to the CEO of these banks or the deputies, because this is an area where we realized that there's no clear format. The banks were not sure where the sustainability file should sit within the bank and who it should report to. So we said that if it's not reporting to the top management, it will probably fall in the cracks and it will not take as much attention. We also asked them to conduct multiple reports, either annual reports based on the GRI, semi-annual one based on the guiding principles we had earlier set in July 21, and a quarterly one based on the bank's sustainable portfolios. The last component of that was to consult an environmental expert in market lending disciplines.
Thank you. Yeah, plenty going on there in Egypt. I'm interested in this point on, we'll come back to how the banking sector is looking at sustainability. I think, Sarah, you can comment on that point. But I'm particularly interested in this point of awareness and the capacity building. I think, Irene, that's something you mentioned in a session with us earlier this week. Could you perhaps touch on that and other actions that the Bank of Mexico is taking around sustainability?
Yes, thank you very much. Yes, Bank of Mexico has been involved very widely in the sustainable agenda since it's a founding member of the NGFS. So there has been a lot of interest, and especially we are aware that even though we don't have an explicit mandate on sustainability, this is part of our financial stability mandate. So we have taken it very seriously and have been working hard on this. So in the meantime, for us, it's very clear, and it has been mentioned in the previous panels too, that capacity building is crucial, that we need companies and financial institutions and also authorities to be aware and to have knowledge around climate and sustainability issues. The valuation of assets don't have embedded this type of risks. Also, the frameworks for action and the business models don't have these type of risks in their risks analysis. So we know that our task is to build an enabling architecture in terms of regulation and in terms of supervision that really helps to do that. But in the meantime, as I said, what we need is to build capacities. So this is just a very recent initiative. The central bank with other financial authorities is building a training hub, which we are convinced that is crucial to be accessible for all of the public, all of the audiences. It's going to have all of the learning materials and training materials in Spanish. It will be available 24/7. It will be free for all kinds of audiences, authorities, academics, also financial institutions, non-financial institutions, and so on. So that we think that this is going to be a very important pillar of building the whole architecture for sustainability. We think also that in this hub we will have new tools like forward-looking models and additional new methodologies for identifying and measuring climate risks. So we have a lot of hopes on this, in addition to an institutional arrangement where different financial authorities have a huge dialogue. We have Sustainable Finance Committee, in which all of the authorities are represented, as well as the academic sector and some observers. And I think a very important player there is also a representative from the central government that is in charge of the MDGs. So I think that this puts together all of the parts that are needed for this to advance in a very gradual but very strong manner.
Thank you. Coming to you, Sarah, on we've heard a lot here about some of the strategies that are being implemented in Kenya, Egypt, and Mexico. How important is it from your perspective as getting the end goal towards financial sectors heading towards net zero? How big a role do central banks have in providing that framework and basis to get the financial sector moving in that direction?
Thanks, Nikhil. I would say it's hugely important. My experience before being with UNEP-FI, I was in financial regulation in the UK for a decade, and I think the kind of arc of activity from the central bank and regulatory authorities that we saw in the UK has had an enormous impact really on how financial services firms see the risk, understand it, and have been developing their capacity to manage it. And so just a few reflections on the kind of the arc of that journey. I think that, the first port of call for any central bank really is thinking about the risk, both at an idiosyncratic sort of microprudential level, and how there needs to be sort of supervisory guidance on how climate risk feeds through to all the normal risk types that banks deal with every day. So, operational risk, market risk, and credit risk, but also on a systemic kind of macroprudential level where, the introduction of stress testing can really help, because stress testing for climate is so very different to the stress testing that's normally done for, credit risk and that kind of market disruption. I think there's, we can see that there's been such a huge shift in central bank thinking. I think recently the US Treasury Secretary talked about the potential systemic risk to the US financial system, and there are estimates of potential stranded asset risks, which we heard a little bit about earlier, of up to the magnitude of 100 trillion across all financial markets. So I mean those numbers are unfathomable really, and potential impacts are massive. So I think it's been hugely important, and I know some central banks have then sort of started to put their money where their mouth is and do their own TCFD report, which is an incredibly interesting learning experience and helps to feed through to, I think, the supervisory approaches where banks, look at things like their corporate bond purchase schemes or the collateral that they're holding from banks in their own operations, etc. So that's an interesting area of work for central banks. And I think the next point of kind of exploration is going to be the capital regime for climate risk, and whether it's appropriate for climate risk to be brought into risk weights, Pillar 1, Pillar 2A, Pillar 2B. Is capital the solution, or is actually, I think ultimately the only solution to climate risk is for all economic players to pull in the direction of 1.5. So logically that kind of brings central banks into the realm of transition plans and thinking about the transition plans of banks and insurers and how to evaluate those. But also, I think another area that's gaining real traction now is in biodiversity and nature risk, how that interacts with climate risk, and what really working out the role of central banks in that.
Thank you. I just wanted to, as a quick aside, I guess, on that point, given some of the concerns right now in the banking system globally and the financial stability concerns with things like SVB and Credit Suisse that we've seen in the last few weeks, are you concerned that some of the momentum towards moving the banking sector towards thinking about sustainability, some of that progress might be stalling because of some of these near-term concerns right now?
I think all distractions like that are incredibly unhelpful, and obviously they do absorb a lot of capacity within banks. But I know banks have really been going through a process of kind of developing their sustainability teams and upskilling people across all areas of the bank, first line, second line and third line on climate risk and sustainability risk. So hopefully there are sufficient people that can kind of keep their minds on that. I think we really need to appreciate now that, climate has to be front and center of every financial decision, and we can't let that be distracted from.
Thank you. I wanted to come on to, we've heard a lot about how there are so many risks. I think across the last few days we've heard about all the risks that are there, from physical risk, transition risk, to the financial stability risks. But there are opportunities, of course, as well, with the green transition. And I think emerging markets have an important role to play within that. So perhaps we can use this as an opportunity to almost pitch here as to what the opportunities are in your countries, and what you see as the opportunities to be able to mobilize climate finance in each of your countries. Perhaps, Rami, we can start with you. Where do you think the opportunities are for Egypt to, where are the investable projects right now, if investors are focused on sustainability?
Thank you. That's actually a great question. And in juncture with your previous question to Sarah about the near-term concerns about the global conventional banking issues. I don't want to say crises yet, and I hope it doesn't transcend into one, but with everything that's happening, I personally think that this is an opportune moment. I would look at this with a more positive perspective, because I think now with investors seeing how conventional banking is still yet surprising us every day with yet another shock and another risk, although the risks have been, and the risk mitigation frameworks should have been well set and well established a while ago, but the risks still coming up, and I think it's a good reminder that it's important to diversify away from conventional banking. You can actually use this as a golden opportunity to pitch for sustainable and green sustainable finance, because this is one of the best ways you can diversify, in my opinion, away from the traditional risks. So I think we should build on this rather than shy away and use it as yet another opportunity to delay the transition towards green and sustainable. In Egypt, I think we are blessed with the geographical location of the country to start with. We have ample and abundant renewable energy resources. We have enough wind-generated energy opportunities. We also have the abundance in the solar energy almost throughout the year. And we've also invested as a country in the infrastructure a while ago, so that it enables us to have a better energy mix that can cater to the ambitions and the commitments that Egypt has committed to a while ago. And I think that with deeper capital markets and with Egypt becoming more and more investment friendly, I think that I must admit that being more active and present in the capital markets, even in the conventional bonds, has put Egypt more on the radar. So we have to owe it in part to what has happened in terms of the regular issuance in capital markets. Becoming an investable market has helped make Egypt more visible to investors, let alone other investors, with the efforts that Egypt is taking on the green front. Will definitely benefit from what has happened on the conventional bond issuance side. I think the fact that Egypt was the first country in the MENA region to set the framework for sustainable finance in line with the standards, international standards, as well as being the first and pioneering country in the region to issue green bonds, has also helped Egypt establish itself as an issuer in this green space. The bond was issued with a size of 750 million back in 2020. It was more than 5 times oversubscribed, received a lot of attention, and also helped provide a wider and more diverse base of investors than the typical culprits we'd see in other conventional bonds. So I think that, again, with a geographical location, with the right governance structure, with us aspiring and striving to improve and deepen our capital markets, I think we have the right blend and mix to attract the investors on that front. Thank you.
Thank you. Yeah, might come back to that, the point on green bonds and some pinning down some more specifics in sustainable capital markets in a second. Sheila, I'd like to come to you on the same point as to what are the opportunities there and perhaps investable projects in Kenya for investors who are focused on sustainability criteria.
Yeah, I think firstly we've already issued a green bond, so the structure's in place. What I think is that during the COVID period, a lot of the progress that was being made in this area kind of stopped. But now it's got to pick up again. And in fact, with the UN, Kenya is going to have the first African climate conference in sub-Saharan Africa in September this year. So we welcome you to join us and to listen to us from there. I think it does come back to understanding and standards. I really, really feel that. I come here and I listen, and I have the opportunity to attend in different countries the various debates around capital and how capital can be invested. And you do hear a dislocation in the conversation. And with the African continent, I think a lot of it has to do with the fact that we're not well understood. And I think it needs the help of both sides. The African markets, and Kenyan market in particular, has to be very responsive to questions that are asked. I came off a 10-hour, 12-hour flight because I went through the Emirates and went straight into a conference call with Moody's when I arrived here, because they wanted to ask me some questions. We have to do that because we have to get people on board so that we get the confidence and the comfort factor. We are not the same as well. So I think it's naive for people to think that they're going to replicate London in Nairobi. You're not. But you're going to get a different opportunity, and you're probably going to get better returns. And so what you've got to do is assess what your risk is and what your understanding and what your comfort level is. But that comes from both sides. And you can't assess from these markets what I said earlier about the standards that are being set. They're being set from the basis of a so-called developed market, which has all the problems of non-green. But you're coming to our markets, we don't have those non-green problems, so you need to assess it differently. And I think it's that conversation that needs to be had, that conversation that needs to be heard. What is it that you're looking for? And also when they talk about why don't you come to the capital markets, our capital markets are not as deep, but we're very happy to make them deep. You say you want products. Which products do you want? Tell us what you want, and then we'll tell you what we can't do, and we'll tell you what we can do so that we can have an engagement. I think the point that's still kind of a little difficult between us is the size of projects, and I know this is something that you struggle with. But surely, if you could just test us with smaller projects, that might actually help, because we don't have the big projects that you're looking for. We don't have the big size projects that you're looking for. But maybe it's a good idea to come in with something small and just get to know us, just get to know us. So I think that, when I look at Kenya, I had written something here which I'd like to, because I spent some time thinking about it. We want a bold conversation. I can't find it, which is what happens. We want a bold conversation. We want to move together. We want to get to know each other and understand each other. Africa has an opportunity that the world is going to miss. And we actually have the ability to help now with this green problem. We have 2/3 of the arable land that's not cultivated. We have 70% of the people in Africa, sub-Saharan Africa, are below the age of 30. So you have the manpower, you have the youth, you have the energy. And then the third thing that we have as well is we have the climatical conditions. Kenya has 88% renewable today. And 40% of that comes from steam. I don't know, is it hydro or, yes. And then 30% comes from water, and 10% comes from solar. So what we're saying is that it's all there. We just need to understand each other better, set up some structures that work for both of us, and respect and understand each other, be bold. I think I've heard someone say that the pricing is too high, and you're not assessing the risk properly. Thank you.
Thank you. That was a convincing pitch, I think. Actually, on that energy mix, it's interesting in Kenya, as you mentioned, there's significant amount of renewable energy generation already. It's perhaps a different case in Mexico, which is still an oil producer and still relying on fossil fuels. In that sense, Irene, where do you see some of the opportunities with, in terms of transition finance and as the world is moving greener, hopefully, where are the opportunities there in Mexico?
Yeah, I think Mexico has definitely a huge potential for clean projects. We have very clear advantages for clean energy, and this is very good news if you think about what you just mentioned about a fossil energy industry in Mexico. But I think we are ready, and we have all the resources, the natural resources, to transition. So although we are still in this more fossil energy industry, there is a lot of political will also to go to more clean energy. I think another potential for clean projects comes from a nearshoring opportunity with the disruption of supply chains. I think there is this whole discussion about deglobalization and nearshoring and friendshoring and so on. And the location of Mexico, it makes it very attractive, and especially because we have also many free trade agreements, but especially within the renegotiation of NAFTA, which is now USMCA, I think we have sustainable criteria that can help to lead in terms of making nearshoring in a sustainable manner. So I think there is a huge opportunity also to set some kind of sustainable strategy that really brings in a win-win model that can also be an example for many new initiatives. And I think there's a lot to be done. There's a lot of potential. There is a capital. I think there are resources. But the thing is mainly how to build all of these initiatives so that, as was mentioned in the previous panel, to make them bankable and attractive and reconcile long-term returns with short-term strategies. So I think there is a lot of potential.
Thank you. Sarah, two-sided question. So first, in terms of the opportunities in emerging markets, specifically when it comes to the banking sector and how they're able to decarbonize, but also what are the key challenges there that you're finding right now?
Yeah, I think, I mean, the opportunity is really clear that there is an investment gap in emerging markets and developing countries. You know, investment in clean energy needs to grow to $1 trillion a year by the end of this decade, and it needs to be at that level every year out to 2050. So, absolutely massive opportunity there. Maybe I can come on in a while to talk about some of the reasons why that's not happening at the pace it needs to. But I think there are some big opportunities. So one is to build into these capital markets sustainability in a really holistic way from the outset. So, you know, climate's obviously vital, mitigation and adaptation, but also think about issues like water and nature and human rights and other sort of SDG-related factors at the same time. Because there are so many opportunities for win-wins across these things. You know, some of the climate initiatives can really help to improve people's health and well-being. So, and I think another opportunity is the opportunity for partnerships and collaborations. So to bring together organisations like the UN bodies, UNEP, UNEP-FI, the development finance institutions, central banks, the networks like NGFS and the Glasgow Finance Alliance for Net Zero. And also, importantly, are the local banks that ultimately will be channeling this kind of investment because, you know, as capital markets aren't so extensive in emerging markets, the banks have such an outsized role there. And I think there are some good opportunities, really. I think one of the key things that's come out is that not all countries are the same. You can't just lump emerging markets and developing countries together. There's such a different context for each in terms of the energy system, the maturity of different industries, and things like that, and the regulatory and policy frameworks. So I think, you know, that's hugely important, and to develop kind of country-level platforms. So there's a few really good examples, like the Nexus for Water, Food and Energy in Egypt, the Climate Finance Leadership Initiative in Colombia, and there's one in India, and the JETPs, so that's the Just Energy Transition Partnerships. And I know there's, you know, a lot more focus on that from the Glasgow Finance Alliance for Net Zero this year. Two more opportunities. One is in transition finance. We really need to work out how to define what is transition finance in a robust way, so that it's not subject to accusations of greenwashing. It's not just, oh, it's, you know, BAU, you're just saying it's transition finance. We need a robust way to be able to define that. So there's an opportunity there to work together on that. And also, I would say there's a huge opportunity in emerging markets to develop high integrity carbon markets, because, you know, around the nature-based solutions and the opportunities that there are, as you said, the land-based resources could really be brought to the fore there. So lots of opportunity.
Yep. You mentioned that there's reasons there that this isn't currently happening. What are the key hurdles there right now?
Yeah, I think some of the barriers to this are that the cost of capital is too high, and a lot of that comes down to the credit rating of the counterparty or the country involved. And some of the barriers around that really come down to policies and regulations. So these can, there can be policies and regulations that unfortunately are sort of artificially inflate the price of, for example, renewables and make them not as competitive against ongoing fossil fuel production as it should be. And so I think, there's an opportunity for policies that can really help to stimulate that investment in renewables, so things like auctions of energy, feed-in tariffs, net metering, tax incentives, but also outside of energy, things like transport policies and building standards, and thinking about things like fossil fuel subsidies and also currency risk is a really big one. And I think you need to kind of create those enabling conditions to enable that capital to flow in, and that's when you can look to catalyse through public and private investment, and use those tools like we heard a little bit about earlier about blended finance, concessional terms, guarantees, that kind of thing. So I think that de-risking is hugely important to kind of get that tipping point on the cost competitiveness, and also develop those pipelines of projects. And we heard about the kind of the ticket size being a bit of a barrier. So maybe there's opportunities to kind of bundle those to make them more attractive to investors.
Thank you. Just on that, I think we have the results from our poll, where we asked in more detail about some of the challenges to mobilizing sustainable finance. So, yeah, regulation, which you mentioned, 15%, and lack of investable projects, which I think touches on the point, Sheila, that you made, that some of the investors are maybe looking for a bigger scale. Actually, it seems there overwhelmingly that the bigger issue is insufficient data and information at 38%, and debt constraints, which you also touched on, 31%. Insufficient data and information, I think, is the theme that's come out across the conference over the last 2 days. And also in some of the work that we've done at OMFIF, when we've looked at global public investor surveys for central bank reserves managers and also pension funds and sovereign funds, this is always the key issue that comes up in terms of what are the hurdles to further ESG adoption for investors. Rami, I'd like to get your thoughts on this poll. And your reaction to this, really.
No, I actually can't agree more. I mean, most of these are definitely obstacles and hurdles that do face mobilizing finance to green projects. Sarah mentioned there's no one size fits all, and I agree with that. So there might be a range. I mean, the spectrum obviously can change and vary between one country to the other. So we cannot say that, what applies. I mean, the results of these polls apply everywhere. I mean, it definitely does overlap, I think, in most jurisdictions with a different variation. So in terms of, and generically, not necessarily specific to the case for Egypt, insufficient data and information, I think this is definitely a hurdle. There is data asymmetry, and that does obstruct the flow and the appetite for this. In the previous discussion, when the issue was raised about Africa, and then the response by one of the panelists was that the lack of enough data and transparency could be a bottleneck. This is definitely the case anywhere. Any prudent investor trying to put money in us as a Central Bank of Egypt, when we invest, we need to be fully aware of what we're investing into, what kind of exposure we're exposing ourselves to. So data is key across all investment realms, so be it green or not. But adding to the complexity of sustainable finance. There's definitely, again, because this is a very nascent and novel sphere, we need to put a lot more effort in providing more disclosure, more transparency, and more data into the processes. We have to do that. This is not something we can hope for it to happen. We have to take and play an active role on that, because this will definitely be a hurdle. In terms of regulation, I think we also have an important role to play as central banks. And again, we have to start by ourselves. Even though this is not strictly a mandate for the central banks, or seemingly not, but I think it has to be deeply entrenched and embedded in the standards that the regulations that the central banks will set forth for the bodies they supervise. And we have to start now, and we have to be consistent. I agree that the transition to a low carbon economy has to be a gradual one, because there are so many trade-offs. So you cannot go to an emerging market with the size of Egypt and say, you know, this has to happen overnight, irrespective of the fact that we are already low emitters. But I mean, the case in point is with the population growth we're growing by 2% or more a year. And similar to the case in Kenya and most of Africa, 60% of the population in Egypt is below 30 years or less, which is an opportunity, but also a risk. It's an opportunity because this population is very dynamic, it's very tech savvy, and with the adoption of more technology in our everyday lives, I think this helps with the data availability, and makes the data more available, given how these younger populations are adapting more and using technologies that are more data and technology sufficient. So I think that we need to work on that in a very unwavering manner. And of course, issues such as the lack of investable projects. I think the projects are there, but the full package is not there. So you need to do more on the disclosure, you need to do more on governance, debt constraints. There's no doubt that with the countries that are already overly burdened with a lot of debt, it makes the window for borrowing even tighter. So there has to be consideration from the borrowers on the overall debt situation, away from the typical and classic, debt ratios that would otherwise be really impeding their ability to borrow.
Thank you. I'm conscious that unfortunately we are starting to run out of time. We have a few minutes left where I want to open it up to audience questions. Yeah, we've got one in the back there.
Sure. Hi, William Atwell from Sustainable Fitch. I want to ask the panel about their views on the future of sustainability disclosures in emerging markets. It's clearly insufficient data and information is the big issue, and I know there's been some progress with the disclosure guidelines linked to the voluntary disclosure guidelines linked to the South Africa Green Taxonomy, for instance, guidelines coming out from the Johannesburg Stock Exchange. Do you think in the coming years we're going to see a lot more movement in this area in emerging market jurisdictions like we've seen, in the EU and so on so far?
I think, Irene, this would be a good opportunity for you to talk about Mexico's taxonomy, which was released last week.
Yeah, right. So we have a brand new taxonomy that was released just last week, and I think it's a very complete taxonomy with more than 129 elements or sectors. And as an additional feature of this taxonomy this is the first one that includes this social dimension. It includes a gender index for all of the sectors, and I think this is one step beyond and brings a very important step towards going there. Now that you were asking about disclosure, I think to get to disclosure, we have to be aware of the risks and measure them. So in measuring is where we need not only awareness, but also data, just like it was indicated here, and also have methodologies. And I think there is a huge challenge, not only on climate risks, but also on biodiversity. This is a newer area, and especially it is more difficult to measure because we don't have a specific measure on biodiversity loss. It's not like a carbon emission that is this size or another size. It's much more difficult to include it. So I agree that disclosure is a very important issue to be happening in the coming years, but we would need to first to measure in order to be able to disclosure. And I think that disclosure and accountability is key for investors, for mobilizing capital. So I would also now highlight the role of development institutions, because markets are not able to bring in resources into sustainable, friendly investments by itself. So we need third parties like development institutions, not only to give all of this financing in terms of guarantees and blended financing, but also in providing the frameworks for, especially for tackling also the scales of the projects, and to reduce the costs, especially for smaller projects, in order to go to a transition project or a green project, and to be able to report, because reporting is very costly. So I think that international and multilateral institutions should bring in a lot of technical support, but also a lot of these other tools like frameworks and additional tools for different markets to be able to make projects more bankable.
Thank you. Do we have any other questions in the audience? Yep, there's one in the front.
Thank you very much. I just want to have this brief thinking about, we know that emerging markets needs a lot of investment in mitigation and adaptation, and for that, a lot of capital is needed. But we also know that in emerging market economies, local capital markets are not well developed. So what is a better strategy for these emerging market economies? To focus in on developing good environmental projects and strategy in order to tap funds from international markets, or try to develop local capital markets? Thank you.
Yeah, it's a great question. Sheila, I'd like to come to you on that, since I suppose Kenya's been taking that two-pronged approach of trying to mobilize international capital, but also building from within. Where do you see as the priorities there?
No, I mean, I think it's a great question. I don't think you can do one or the other. I think you have to do the two together. I know that in Kenya recently we've released a new law on public-private partnership, which is going to be built into the capital markets. In addition, the Central Bank of Kenya is working on a project which is a central depository system, which is going to be purely digital. So even people overseas, in England, in Europe, in wherever, can invest into Kenya domestic debt, government domestic debt. We did that very successfully with our own people, and now we're saying, can we do it digitally outside of Kenya? So that actually is going to be released, I think, next month. But I also want to put a caveat: whenever you're releasing these big IT projects, give us a couple of months to go through the bugs, and then please come and test it. And we're trying to make it as little as possible. I think in Kenya that should be in the region of $30 for somebody to be able to invest on the street, on their phone, into government debt. So we're trying to develop these markets. And at the same time, what I'm asking is that when I hear you talk, you say things that I didn't know. And that's why I'm saying, can we please talk to each other? And can you tell us what it is you're looking for? We can tell you you can't have that, when that's not what we're giving. Or we can say, we didn't know you wanted it. How can we do this together? So I think that conversation needs to be had. The insufficient data and information is something that really drives me. At the Central Bank of Kenya, and I'd please ask all of you to go onto our website, we pride ourselves in having accurate, reliable relevant, timely data. And if you go onto our website, every time we get something, we don't hide it, we put it straight into our website. And I think it was 2017, we actually won the global prize for central banks for the best website. So when we're talking information, data, we're trying our best. And if there is ways to improve it, again, tell us. I remember right at the beginning of the conference, there was someone sitting here who was also saying, I get it wrong, please tell me. And I think that's the right step to have to show that you're committed to this process. Thank you.
Thank you. Rami, same question to you. And I suppose a bolt-on to that where there are difficult conditions there in international markets, as Sarah mentioned, cost of capital is rising, US interest rates are rising, and all the global shocks that have been out there. Does that now place more importance on building from within? And you mentioned the green bonds that have been issued domestically in Egypt. Do the challenging international conditions drive you more to look inwards?
We definitely do, because again, I think that this is a great opportunity to be able to present yourself as a market that is multifaceted. So when one scope goes under, you still have other options on the menu for investors. Investors like to have that kind of diversity and agility. So I think both have to go hand in hand. You need to continue to establish your capital markets, because it's going to be at the end of the capital markets where these bonds, whether green or not, are going to be issued and traded. And there's a whole scope of an educational curve, learning curve that needs to be acquired in all cases. So you need to make sure that everyone in the market is apt and well educated and well aware of the importance of having capital markets because in some cases the public is not fully engaged in capital markets. So this is a problem. You do not have the public invested in government bonds. Although they end up investing or lending banks, which ultimately are investing in government bonds, but the awareness is not there yet. So you need to educate. You need to have a lot of financial literacy, especially where financial literacy is not quite deep. So while doing that, you should also be indulging in building your own capacities from within, which of course will help you, again, be able to cater to all kinds of markets. So use this moment, use this opportunity, I think, on both sides to converge and to understand better, educate ourselves, and make the best out of not the best markets out there.
Great. Thank you. We have just 5 minutes left. Are there any other questions here from the audience? Otherwise, I still have a few of my own. I think, Sarah, I'd like to come to you. In terms of a lot of the goals that you're working towards, I suppose, in particular, the Net Zero Banking Alliance is around 2050 targets to get to net zero. But in the more medium term, say 5 to 10 years, what would you deem as success in terms of, in particular with emerging markets, in going towards decarbonisation or building their own capital markets and financial sectors to take into account sustainability?
Well, I think a lot of the talk around net zero is always around 2050, but you just cannot emphasize enough the need for near-term action. So, we can't be looking that far ahead. In the Net Zero Banking Alliance, our members have to make targets for 2030 or sooner, in line with 1.5 scenarios, with low or no overshoot. So that is really the priority. I mean, if you think the end of this decade is only 7 years away, and by then we have to have almost halved our emissions compared to a 2019 baseline, which is a staggering thought. And how we get our capital markets to support that is, it really needs a lot of focus. Again, I come to the point on data. Many of our members in emerging markets really struggle with, just measuring their financed emissions because the data just isn't there. And I think, globally, we need a push to get environmental data onto an equal footing with financial data in terms of timeliness, decision usefulness, accuracy, etc. And we really do need to try to make sure that all the standards, taxonomies and everything that people are working towards are at least interoperable, but really to try to avoid that the kind of fragmentation. And I just want to stress the importance of the chain of data from the real economy. And it's not just large corporates, it's SMEs. SMEs play such a vital role in emerging markets. And we need that data to trickle through from SMEs, corporates, through the real economy and then into the financial sector, so that the financial sector is able to measure what they need to in order to steer things towards 1.5 goals. And I would just like to come back to the report that was issued on Monday by the IPCC, which stressed so emphatically the need for near-term action. So let's make this focus on net zero, on immediacy of action. There is absolutely, no time to waste at all. And I think, climate considerations need to be in everything, everywhere, all at the same time. So, yeah.
I think that would be a great point to end on, that call to action. I think some of the key themes that have come out of this is the need for urgent action, the need to build more awareness around what's going on to help bridge some of these data gaps. I think, as we've seen, there's plenty that is being done in various emerging markets that perhaps is not out there in the wider consciousness of investors or people on the ground more generally. So I'd hope there will be a silver lining and things will move in the right direction. That just leads me to thank our panelists here for really engaging discussion, and we can continue them on in our refreshment break. I think we're back here in half an hour. Yeah, perfect. Thank you very much.